Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning and extremely positive cues coming out of the global markets, given the fact that we have better than expected data coming in from the Chinese economy as well. So that's also bolstering sentiment across the Asian markets. And of course, lots of stocks in focus this morning, including Infosys. You have MedPlus and Alchem Labs also in focus. We'll be talking about these stocks, and we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed, and we will take them up. We'll also be getting you the management of Dwarikesh Sugar. So stay tuned as we move forward on the show. But before we do all that, let's take a look at the top headlines at this hour. Strong close on Wall Street. The Dow rallies the most in over a month. Chip designer ARM sees a stellar listing pop of 25% in its first day of trading on the Nasdaq. Meanwhile, US wholesale inflation is in August rises 0.7%, the biggest monthly gain since June 2022. European markets rally after ECB hikes rates to record level. The stock 600 jumps over 1%, while FTSE gains close to 2%. The European Central Bank indicates further rate hikes may be off the table for now. Asian markets largely positive following a strong handover from the US and European markets, and of course positive data coming in from the Chinese economy as well. The GIFT Nifty suggests a positive start for the Indian market. Oil extends rally with the US crude topping $90 a barrel for the first time since November 2022. Brent crude trades above that $94 a barrel amid expectations of tight supply. And on the show today, we put the spotlight on a whole host of stocks, including Infosys, GMM Pfaudler, Bharat Forge and the likes. And we will also be touching base with the management of Dwarikesh Sugar and talk about the ethanol opportunity as well as where sugar prices are headed from here. Well, let me first bring on board our technical expert for today, then Raja Venkatraman joining in. He is, of course, the founder of Neotrader. Good morning, Raja. Great to have you on the show. It's a Friday morning. We are knocking at the weekend and we have great cues coming in from the global markets as well. We had a record close for a second day on the trot yesterday. More leg up in today's session, and what are the resistance levels that you'll be watching out for on the Nifty?
Yeah, good morning, Nandita. So this time around, we are also having some positive vibes emerging from the global markets, and also not only the US, also from China, plus the rate hike scenario, which was quite prevalent a few months ago, seems to be stalling at the moment. So a lot of positive cues emerging at the moment, though at the domestic front, we continue to feel that markets are getting stretched. We are having, overvalued situations, be it the mid caps, small caps. But then the most important thing, what we need to understand is that in the last month, majority of the funds have come into the mid and small caps. So that means that the momentum is still very much on. So if we have to, consider that the rally is over, I would say not. The resistance level based on the option data were emerging around 20,150 to 20,200. Well, now that's going to be taken out right at the open. Now, considering it is the last day of the trading week, we are ending the week on a high. So probably there could be some profit booking scenario emerging. But based on the option data at the lower levels, the 20,000 level is going to act as a very strong support now. It's a round number plus a lot of put writing at those levels would ensure that any dip in near those regions towards say 20,100 could offer us a good opportunity to remain long. So I would advise that despite the next week being a curtailed week, one should continue to look at higher prospects. That is the scenario as far as the Nifty is concerned. So upside remains open towards 20,700. Now, when you take a look at Bank Nifty has also undergone a similar scenario. There has been continuous attempts to cross 46,000, and that is going to be an important zone. So unlike Nifty, Bank Nifty is having certain challenges, and a closing today above 46,000 would definitely bring the spotlight on Bank Nifty in the coming week. So it's a good time to be on the long side. Use the dips to buy into rather than go on the short side.
All right, buy on dips market, and 20,700 remains open on the index. That's the view from Raja. Raja, hold that thought. We'll come back and discuss specific stocks with you. But let me also bring on board the management of Dwarikesh Sugar. Joining me is Vijay Banka, who's the whole-time director of Dwarikesh Sugar. Good morning, Vijay. Thanks a lot for taking out time and joining in. Well, the sector itself is in a sweet spot. In fact, sugar prices globally are at a 6-year high and have surged 10% in the last 5 months. Domestically, prices are at 37 rupees per kg. Given the El Nino threat and low output, do you expect prices to go even higher from here? And what's the outlook on your own margins going forward, Vijay?
Very good morning. You see, international prices are very at an all-time high now, primarily because there is expectation that the crop from India will be lower. Similarly, crop from Thailand is also expected to be lower, although crop from Brazil is going to be pretty much good. But having said that, this season, coming season of 23-24 is expected to be a deficit season. So the prices should remain high. Now, how much the international prices translate into domestic, what kind of resonance they have on the domestic prices is something to be seen, because India is no longer an active participant in the export market because of the restrictions imposed by the government, because government feels that Indian production again may be under a bit of stress, although it will be far in excess of the annual consumption. But yet the exports, the surplus availability for export would rather become clear sometime in January, and it's only then the government will take a call on the exports. So, but sentimentally, the international higher prices have had impact on the domestic sugar prices. So we have seen a rally in the domestic sugar prices as well. Last fiscal FY23 was a rather muted and very flattish fiscal insofar as the sugar prices are concerned. But we have seen sugar prices rallying since then. And presently, the sugar prices are hovering between 3,700 and 3,800 rupees per quintal. Now, going forward, we expect the momentum to continue, although we don't expect any kind of runaway increase in the sugar prices. Because in India, again, Maharashtra is expected to, it's already under the spate of El Nino. So is Karnataka. So the crop is under a bit of stress there. UP has had excessive rainfall, again, not very good for the sugarcane crop. So, well, 1 month of excess rain, surplus rain doesn't compensate for the deficit rain in another month. The rainfall should be evenly spread for a good sugar crop. So we expect prices to be sustainable at this level at least for a couple of months.
Vijay, you spoke about the export curves, right? How much export quota do you expect the government to announce? Do you expect it to be above or higher than the 6 million ton that the industry is expecting?
No, not likely, because you see in the coming season, ensuing season of 23-24, ISMA itself has pegged the production number at 31.7 million tons. Now, assuming consumption of about 27.5 million tons, there is perhaps case for export of 4 million tons of sugar and not more, because government eventually would want to maintain a closing inventory of around 6 million tons, which is what is going to be now as well.
Right. Vijay, do you expect the government to intervene to control prices, given the fact that, we have a festive season coming up and we are heading into an election year? Do you expect the government to now intervene, given the fact that, just a few days ago, we heard that the government has sought granular sales data over the last 4 months? So what is the expectation on that front?
You see, the prices which are prevailing now were the prices that were prevailing in sometime in 2016-17. So it's not an extraordinary increase in the price. It's just that, in between the prices remained more or less flattish. So we have seen this because we see a tight sugar balance sheet ahead, both domestically as well as internationally. So the government has, yes, taken up several steps to moderate the sugar prices, the smaller the price increase, if any. For example, they have been releasing higher quotas every month. and they have been trying to impose checks on the traders as well as about their stocking, etc. I guess perhaps that is their intention. So these steps are being taken, but yes, like I said, there is no runaway increase in the price. The prices are reasonable, and these are the kind of prices at which sugar mills are able to recover their cost of production.
Right. Vijay, last question to you. Biofuel and ethanol, these have been the talking points when it comes to, the sugar industry per se. The government has already preponed the 20% ethanol blending target to 2025, 2026, right? Do you think the industry is prepared to meet the target and cover the shortfall from the grain-based distillery?
You see, we have in this season, ethanol season, we will be achieving 12% blending target. So obviously the next year's target is going to be 15% at least. So, sugar mills have been very enthusiastically participating in this ethanol blending program. They have been trying to sacrifice more and more sugar production in favor of ethanol. Capacities have come up. There is one request, which we have pending before the central government, which is the pricing of ethanol made from sugarcane juice directly. So that's a price where it's not a very alluring kind of a price. We expect the prices to be that price to be a little higher, so that mills are incentivized to sacrifice more sugar production and also ramp up their capacities, so that in the coming days, we contribute meaningfully to the lofty targets, blending targets that the government has set.
Right. With that, Vijay, thanks a lot for joining in. We leave it at that. Look forward to touching base with you, later sometime. Thanks a lot for joining in. Well, with that, let's also go back to Raja. Raja, as you were listening in, we caught up with the management of Dwarikesh Sugar. Yesterday, we had a very bullish report coming in on the sugar sector, where DAM Capital had initiated coverage with buy rating on 4 sugar companies, including Dwarikesh Sugar. So what's your own take on this entire space, and which stock is looking best poised on the charts right now?
Yeah, the stock of Dwarikesh Sugar definitely is factoring in the positive sentiment, and we can see that the stock is now coming out of its consolidation. So overall news prospects are good, and the price is also reflecting the same. So I can see a upward trajectory towards say in the region of around 105 within the next 2 to 3 months. So Dwarikesh Sugar is one stock which you should look at. And even the other stock which I would like to consider is Renuka Sugar. And that stock has also spent some time in consolidation, and above 49, it seems to be a good opportunity for one to consider as an investment bet, because it could now challenge its highs towards 60 in the next maybe 3 to 6 months.
All right, that's the view on the sugar pack. Sri Renuka also looking pretty much attractive at this current juncture. But let's also talk about the stock of the day. GMM Pfaudler, it has made an acquisition, of $7 million. Professional mixing equipment, Mix Pro is what it has acquired. Stock is up nearly 17% over the last 1 month, Raja, but over the last 5 sessions or thereabouts hasn't really done all that well. How is it looking on the charts at the current juncture then?
Yeah, see, largely this stock moves in phases. So what we have seen right now is probably the news has already been factored in, and we could experience some profit booking around these levels because it has reached an important value area. So now it has to cross 1800 for it to make some sense. Otherwise, we could experience some profit booking here. So if you're really keen to buy this counter, look for dips towards 1600 to enter.
All right. Let me also bring on. Let me also, get in your thoughts on Infosys. Given the fact that there has been another deal announcement, it has inked an MOU with a global company to provide enhanced digital experiences. Total client target spend over 15 years is $1.5 billion. Of course, we've seen the large cap IT come back in a strong way, starting to participate in the rally. Still, I mean, at least fundamental experts say there's still a lot of room for upside going forward. On the charts, would you say that it is poised to knock at 52-week highs anytime soon?
Yeah, so the fact which I agree with, the view which has been floating around is that yes, IT is due for a rebound. especially after the kind of decline which we have seen. But then when you take a look, when you talk about Infosys in particular, I feel that the stock has reached an important resistance zone, and I would not be a buyer at current levels because there is bound to be some profit booking considering the rise which we have seen over the last few days. Now, if you are still looking to buy into Infosys and participate, then levels around 1450 would be a good area to consider. And the upward traction, if it sustains, has got a target zone towards 1600. So 1600 is the target for Infosys. On the downside, look at 1450 to buy into. Overall prospects look good, but then one should have limited expectations from the IT space.
All right, have limited expectations from the IT space, even though the setup looks a bit positive at the juncture. But let's take up some viewer queries that are trickling in this morning. First of all, I would like to take up a query on IDFC and IDFC First Bank. Prabhu wants to know your thoughts and wants to know the long term and short term, both how it's set up on the charts with these time horizons. What would you advise investors to do with this duo now, IDFC and IDFC First Bank?
IDFC and IDFC First Bank, they are moving in similar trajectory. And considering the kind of performance which we have seen from IDFC First Bank, I would say that it will be much more advisable to go with IDFC First Bank. Yes, recently there has been some pullback, and this pullback offers us a good opportunity to enter into IDFC First Bank. You could enter it at current levels, have an outlook for around 6 months for it to move towards the region of 110, because this is a slow moving stock. So every stock has got a different nature. IDFC First Bank is a slow moving stock, but then it has got promise of moving towards 110 within the next 6 months.
All right, hope that answers your query. Let's talk about the hotel space then, Raja. We have a query coming in from Siddharth Jain. Wants to know your thoughts on Indian hotels. Some of these hotel stocks are on a high. Most of them are perched at 52-week highs. Lemon Tree is also in the news. Which one would you prefer in the hotels, among the hotel space right now? Would you say Indian hotels is something that looks more attractive given the fact that it is one of the larger players in the space?
Right. If you are wanting to participate in any sector, better participate with the ones that move well. Yes, Lemon Tree has shown some signs, but then Indian Hotel is definitely a much better bet because the ones who will move the prices are the ones who are going to participate in such names. So Indian Hotels would be the current bet. Yes, it has got target zones towards 500 within the next 6 months. It has moved out of a consolidation which was there as the start of the year. It came out with decent set of numbers, and now we are getting ready for the next set of numbers as well. So one should definitely look to trade into Indian hotels.
All right, hope that answers your query on Indian hotels. Raja, the renewable space has been, a much talked about space, and even though the stock of Borosil Renewables hasn't really done all that well off late. But we have a query from Peter William who's asking whether it's a good time to invest in this stock. Given the kind of interest and push coming in from corporate India also when it comes to the renewable space, do you think even if there is a lull, it could present a good opportunity to buy into some of these stocks?
Yeah, see, when the market is doing quite well, it is always advisable to look at stocks that are showing continued upward traction rather than looking to buy something very cheap. Yes, the valuations are cheap, the prices are cheap, but then the problem is that you will have to wait by the time the market, the stock actually gives you some return. And when the market starts correcting, it's something which we cannot avoid, and you will definitely have a damage in this. So I would not advise long in Borosil Renewable.
All right, avoid Borosil Renewables at the juncture. That's the view then. Hope that answers your query. Let's take up a query on Engineers India. Would you say it's, the stock hasn't really done all that well in the last 1 month? And off late as well, last 5 sessions or so, it has lost somewhere around 7% or thereabouts. How is the setup looking for Engineers India right now? Tarun Singh wants to know your thoughts.
Yeah. So compared to the earlier stock, this stock has done really well this year. And now what has happened is that the stock has witnessed a very sharp decline, and the declines have come into some good value support area. So this would be a good stock to enter into. It is the right moment now because the stock is showing some promise of recovery from lower levels. So if the market continues its upward traction, then this could be a stock which you can consider investing.
All right, Engineers India was the stock we were talking about. All right, I think we are running out of time, but one last, a query from my end. Stocks like Alchem Labs and MedPlus, they are under the scanner given the fact that the IT department is conducting searches on their premises. Would you say that this bit of negative news could trigger some bit of sell-off in these two counters?
Yeah, see, these kind of news flows keep coming in, and there are certain knee-jerk reaction. But then we got to consider how are the prices really performing. And when you take a look at Alchem Lab, the stock has not really been performing well. So this negative news flow is not going to trigger further negative sentiment. This stock is going to be in a range-bound condition. So I would avoid this stock at the current juncture.
All right, that's the view then. With that, we are running out of time, Raja. We've come to the end of the query segment. But before I let you go, what are your recommendations for viewers this morning?
Yeah, I would like to go in with two long positions. The first is I would like to go in with a long in escorts at current levels. Have a stop at 3105 for a target towards 3150, 3170. And I would like to go in with a long in Lupin at current levels with a stop at 1140 for a target towards 1178 and 1190.
All right, those are the recommendations coming in from Raja. With that, Raja, thanks a lot for taking out time and joining in and sharing your thoughts with us, and of course also answering all of your queries. Wish you a very happy weekend. Well, with that, we've come to the end of this edition of Morning Trade. But just a reminder for viewers, Yatra online IPO opens today, 775 crore rupee IPO. Some marquee names have, bought into the stock as anchor investors. And the price band is fixed at 135 to 142 rupees per share. If you want to know if it's a subscribe or avoid at the current juncture, log on to moneycontrol.com and you can check out what the analysts have to say about whether or not it's a good subscribe or not. But with that, we are completely timed out on this edition of Morning Trade. Thanks a lot for tuning in, but don't go anywhere because coming up next is Opening Bell.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.